Okay, well, today is the 23rd of December of 2022. And I was going to get on my computer to check my air flight because I'm going to be going to Washington to visit my grandchildren and my daughters. Hopefully it's all going to be good. Anyways, I do not celebrate Christmas, but I do celebrate family, and that's okay. Kind of packing up all my stuff. I'm ready to go. I got to go to work today, do a couple people, but when I was here, I saw something that I wanted to share with you. I had been reading this. Let me get rid of this other screen. And we will see if I can open this one up a little bit more. Hey, there it is. Oh, yeah. So this is page 2 and 3 of that securitization is illegal. And I wanted to read that. So I'm going to kind of skip down to this editor's introduction. The asset-backed securitization, ABS, not to be confused with IBS, is fraudulent and has been amply demonstrated by our website reports in this service and in successive issues of International Currency Review. In the following uncompromising analysis, Mr. Michael Nwugugu, CPA, who is based in Maryland, demonstrates with pinpoint technical proficiency how accurate this assessment has been inspired for our part inter alia by the U.S. Securities and Technical Expertise of Michael C. Cottrell, B.A., M.S. The author has looked at securitization from every legal angle and finds securitization under United States law to be absolutely illegal with no redeeming features whatsoever. Given the state of affairs, it would damage the integrity of the English language to observe, and I'm going to try and see if I can make this bigger. Yeah, there we go. How do we get over here? All right. All right. Okay, so let me see. Let me see. How can I do this? Move that little things. Observe more. Oh, come on. Move the little thingamabopper. This little thing is, okay, get over there so I can read you. All right, there we go. Oh, wait, here's it 3. Is it still 3? Okay. It is astonishing that far from paying attention to this glaring state of affairs, U.S. investment officials in high places and their parties abroad further encouraged inter alia by the railroading behavior of the Depository Trust and Clearing Corporation, have been proceeding to gear up for business as usual securitization operations as though there had been no discontinuity. Okay. In addition to being illegal under U.S. law, securitization is illegal under common law. If the prior written permission of the mortgager or other type of asset holder has not been obtained in writing and in such manner that the party is fully aware that they have granted such permission. Did you know that they were making securities on your contracts or your promissory notes? No, they didn't tell you. The transfer and all subsequent transactions are illegal. Moreover, the legal axiom that the money you make from exploiting and abusing my money is my money likewise applies. So that's a legal axiom that the money you make from exploiting and abusing my money is my money. Any contract entered into for an illegal purpose is null and void. Self-evidently, this study focuses on the U.S. legal position, but the same basic principles apply in all common law countries. So far, the talking heads in the so-called mainstream media have chosen to ignore the fact that securitization is illegal. Reality will soon be catching up with them, just as it is catching up with the likes of Goldman Sachs and other protected enterprises. So reproduced from the Economic Intelligence Review, Volume 12, Numbers 7 and 8, First Quarter, 2010, pages 4 through 21, World Reports Limited. This is from the UK. Executive summary reproduced from our report dated the 10th of March of 2010. Why securitization is illegal under U.S. and common law? Here's the reason. Securitization is illegal under U.S. legislation, primarily because it is fraudulent and causes specific violations of the RICO, usury, antitrust, and bankruptcy laws, and it flies in the face of public policy in numerous ways, as was expounded in extensive detail in this analysis published in their journal, Economic Intelligence Review, 2009, Q1, with several pages of book, article, and case references. To begin with, securitization violates U.S. state usury legislation. Boy, that was hard to say. Blah, blah, blah. Secondly, all true sale, disguised loan, as well as assignment securitizations are essentially tax, oh my goodness, evasion schemes. And the penalties for tax evasion in the United States are excessively severe. Wow. Figure that one out. Oh my goodness. Yeah. That's wild. That's kind of like, they say that I own a timeshare and I have to pay the taxes for the property, which is ad valorem, and it's an ascitus, meaning it's a business, but I really don't own it. I really don't own it. They own it. Some trust owns it, and they don't have to pay the taxes. They make the people who have the timeshare pay the taxes. It's giving them a deed saying for life they have this, and for their posterity, or for the ancestors beyond them, or the people, their children and grandchildren and all that, are in it for life as well. Making them have to pay all that stuff, maintenance fees and all that type of stuff forever. That's how these companies do that. So thirdly, in all true sale, disguised loan and assignment securitizations, the conflict of, let's see how I can change this. Oh, command minus. I got to lower it down so I can change page. I'm going to page 4. The conflict of interest. Oh, I would have known that. Yeah, for sure. Now I have to move this over. Let's see. I'm going to move my face over for a second. And I got to command plus to make it bigger. Come on. No, not going to let me. No. Got to go to page 4. Command plus. There we go. That's how you make it big. And I say some of these steps out loud so that you guys can learn how to do this too. Because, you guys can look at documents and read them just as much as I can. But, hopefully without screaming all crazy and doing all cuss words and junk like that. So The conflict of interest inherent in the sponsor. Oh, the sponsor. Oh my goodness. Also serving as the servicer. Oh man. Constitutes fraud and conversion. Oh man, yeah, that's for sure. Oh wow. In the fourth place, in all true sale, disguised loan and assignment securitizations with a special purpose vehicle is a trust. Oh, the declaration of trust is void as it exists for an illegal purpose. Yeah. Oh man, this is cool. This is amazing. Oh my gosh, you know. I think I need to copy some of this stuff. I do. This is good stuff, man. I don't know what to do. I have a letter in the mail right now. It's like gonna go to Wells Fargo. This is really good stuff right here. I mean, this is just amazing. This would help my case. All right, well, I'll figure it out in a second. In the fifth place, off balance sheet treatment of asset-backed securities, both for true sale and for assignment transactions, constitutes fraud. Wow. This is such good stuff right here. Sixth, here's another all true sale, disguised loan and assignment securitization involve blatant fraudulent conveyances. In the seventh place, securitization usurps United States bankruptcy laws and is accordingly illegal, as well as being also demonstrably contrary to public policy. That's true. Securitization entails gross violations of RICO statutes. Oh my goodness. In true sale, disguised loan and assignment securitizations, there are fraudulent transactions which serve as predicate acts under U.S. federal RICO statutes. The specific RICO sections are Section 1341 mail fraud, Section 1343 wire fraud, Section 1344 financial institution fraud, Section 1957 engaging in monetary transactions improperly derived from specified unlawful activity. The money you make from the illegal exploitation of my money is my money. And Section 1952, racketeering. Furthermore, securitization constitutes violations of American antitrust statutes through market integration, syndicate collusion, price formation, vertical foreclosure, tying, price fixing, predatory pricing, and the rigging of allocations. All this stuff needs to be just copied. This is good. All this right here. Man, oh man. Okay, this is how you do it. What do you do? Shift Command 4. And that's, you grab the whole thing. Boop. And then you save it. That's so good. Yeah. Okay, so now. Whoosh. Oh my goodness. Securitization also involves void contracts. Given the lack of consideration, illusory promises, the absence of any actual bargain, the absence of mutuality, and finally, illegal subject matter and the contravention of public policy. Securitization is riddled with fraudulent transfer, fraud in the inducement, fraud in fact by deceit, theft by deception, fraudulent concealment, and fraudulent conveyance. See, the U.S. securities regulations routinely breached in such activity listed at the foot of this report, and of most of these reports for the past 3 years, and other laws also routinely flouted in this context. Notwithstanding that it's illegal, U.S. authorities continue to promote and encourage securitization. Yet notwithstanding such crystal clear indication that securitization is 100% illegal under U.S. law, as well as under common law generally, so that these findings are largely applicable in all common law countries, U.S. authorities from the highest level downwards, financial institutions, intermediaries, intelligence power, operatives, and others are gearing up for what they doubtless hope will be intensified racketeering and trading activity with corrupt foreign counterparties. This behavior is being fine-tuned as we speak, despite the reality that the securitization activity being planned and implemented violates innumerable U.S. statutes in the manner we summarize above, and notwithstanding that such activity is contrary to public policy. And the International Monetary Fund knows all this perfectly well, yet sits idly by, accommodating this racketeering. Indeed, it's as though the rule of law did not exist. From the highest level of the U.S. Treasury, the White House, the U.S. State Department, and the Central Intelligence Agency and its subsidiaries, such as the Lethal Office of Naval Intelligence, ONI, the mindset, intention, and perverse primary objective has all along been to resume fraudulent finance based on securitization as quickly and as seamlessly as possible. The IMF and World Bank are parties to thus aberrant behavior. Summary forensic analysis proving the illegality of securitization. From whichever angle securitization is considered, it is illegal. For example, the contracts are themselves void. This is because the process of securitization involves several contracts that are either signed simultaneously or within a short time frame, many of which are rendered void inter alia because there is no consideration in contracts used in effecting the securitizations. Many such contracts involve unilateral, that means one side, not bilateral, unilateral executory undertakings containing illusory promises. A unilateral executory promise is not a consideration. Such promises typically include a promise made by the special purpose vehicle to pay out periodic interest, whether contingent or non-contingent on whether the collateral pays cash interest. Collateral substitution agreements contain a promise whereby the sponsor agrees to substitute impaired collateral. An assignment agreement of future, not yet existing collateral may well be deemed a unilateral executory promise by the sponsor. Illusory promises are not valid consideration for a contract. Such promises may be found in the subscription purchase agreement, whereby an existing asset is being exchanged for a future asset that does not exist as of the date of the subscription purchase agreement. To make matters worse, none of the agreements typically signed by the investor as part of his or her purchase of the special purpose vehicle asset-backed securities expressly incorporates the typically illusory promises embodied in the offering prospectus, or the special purpose vehicles promise to pay interest and or dividends on asset-backed securities, interest onlys, preferreds, and principal onlys are essentially illusory promises because the underlying collateral may not produce any cash flows at all, so there won't be any interest or dividend payments. Moreover, the lack of mutuality characterizing such contracts renders them null and void. By definition, in any such contract, each party must have firm control of the subject matter of the contract and underlying assets consideration, and there must be a direct contractual relationship between the parties concerned. But this is not the case, especially as the special purpose vehicles corporate documents trust. All right, let me reduce this again. See if I can go to page 6. Yeah, I did it. Okay. Indentures, or bylaws or articles of incorporation may typically limit the right of each asset-backed security investor. While there is typically no mutuality at all between the special purpose vehicle and the sponsor originator, because both entities are essentially the same and are controlled by the sponsor before and after the securitization takes place. Securitization, a cover for tax evasion, in addition to their multiple violations of American state usury laws, all true sale, disguised loan, and assignment securitizations are essentially tax evasion arrangements. In the United States, the applicable tax evasion statute is the U.S. Internal Revenue Code section 7201(7), which reads, any person who willfully attempts in any manner to evade or defeat any tax imposed by this title or the payment thereof, in addition to other penalties provided by law, be guilty of a felony, and upon conviction thereof shall be fined not more than $100,000, $500,000 in the case of a corporation, or imprisoned not more than 5 years, or both, together with the costs of prosecution. Under the statute and related case law, prosecutors must prove 3 elements beyond any reasonable doubt. 1. The actus reus, the guilty conduct, which consists of an affirmative act, not merely an omission, where you don't mention anything, or failure to act, that constitutes evasion or an attempt to evade either the assessment of a tax or the payment of a tax. 2. The mens rea, or mental element of willfulness, the specific intent to violate an actually known legal duty. In the case of true sale transactions, the tax evasion occurs because A, the sponsor determines the price at which the collateral is transferred to the special, what is it called again? Special P vehicle? Oh, special purpose vehicle. And hence can arbitrarily lower or increase the price to avoid capital gains taxes. It being assumed here that the sponsor is a profit maximizing entity and will always act to minimize its tax liability and to avoid any tax assessment. B, the sponsor typically retains a residual interest in the special purpose vehicle in the form of IOs, POs, junior pieces, which are typically taxed differently and on different tax basis compared with the original collateral. Hence, the sponsor can lower the price of the collateral upon transfer to the special purpose vehicle and convert what would have been capital gains into a non-taxable basis in the SPV, special purpose vehicle, residual. C, there is typically the requisite intent by the sponsor, evidenced by the arrangement of the transaction and the transfer of an asset to the special purpose vehicle. D, before securitization, collateral is typically reported in the sponsor's financial statements at book value, that is lower of cost or market, under both the U.S. and the international accounting standards. Loans and accounts receivable are typically not revalued to market value unless there has been some major impairment in value, which does not reflect true market values and results in effective tax evasion or transfer of the collateral to the special purpose vehicle, as any unrealized gain is not taxed. E, the actus reus is manifested by the execution of the securitization transaction and transfer of assets to the special purpose vehicle. F, the mens rea, or specific intent, is manifested by the elaborate arrangements implicit in securitization transactions. The method of determination of the price of the collateral to be transferred to the special purpose vehicle, the aims of securitization, and the sponsor's transfer of assets to the special purpose vehicle. G, the unpaid tax liability consists of foregone tax on the capital gains from the collateral. The transaction is structured to avoid recognition of capital gains and tax on any income from the collateral, which is converted into basis or other non-taxable forms. H, income from the collateral that would have been taxable in the sponsor's own financial statements is converted to a non-taxable basis in the form of the special purpose vehicle's interest only. Interest only is IO, and principal only is PO. Securities part of the interest spread. The difference between the special purpose vehicle's income and what it pays as interest and operating costs is paid out of the principal only holders. And this transforms interest into return of capital or just capital repayment with no tax consequences. In cases of disguised loan or assignment, securitization transactions, tax evasion occurs. A, Because the sponsor determines the price at which the collateral is transferred to the special purpose vehicle, and hence can lower or increase the price of the collateral to avoid capital gains taxes. B, because the sponsor typically retains a residual interest in the special purpose vehicle, which is normally taxed differently and on a different tax basis compared to the original collateral. Hence, the sponsor can lower the price upon transfer to the SPV and convert what would have been capital gains to a non-taxable basis for tax purposes. C, because the transfer of collateral to the SPV and the creation of interest only and principal only securities converts what would have been taxable in capital gains into non-taxable basis. D, because gain in the value of the collateral is not recognized for tax purposes because there has not been any sale. Whoa. Oh my gosh. E, where the asset-backed security, ABS, is partly amortizing, any capital gains are converted into interest payments. Whoa. Wow. F, because actus reus is manifested by the execution of the securitization transaction and transfer of assets to the SPV. Whoa. G, because the mens rea or specific intent is manifested, you know, like when a demon is being manifested, you can kind of see it. So this is showing the proof is in the pudding. The mens rea or specific intent, you know, the bad behavior here, it's manifested by the elaborate arrangements implicit in securitization transactions. The objectives of securitization and the sponsor's transfer of assets to the special purpose vehicle. Command. Okay, let's see. Page 8. Yeah. All right, let's go over here. H. Because the unpaid tax liability consists of tax on the capital gains from the transfer of the collateral, the transaction is structured to avoid recognition of a sale. Whoa. Whereas the transfer, to the special purpose vehicle is effectively a sale. Yeah. And tax on any income from the collateral, which is converted into basis or other non-taxable forms by securitization. I mean, I was thinking about, when I was reading that, when World Savings got bought out by Wells Fargo, wouldn't that be a sale? Or are they just making a transfer from one bank to another bank and thereby not even paying any tax on those sales? I mean, because you got to look at your county recorder under your name to see if any assignments happened with your bank loan, you know, that disguised loan. Securitization violates the U.S. Bankruptcy Code and therefore also contravenes public policy. Any transfer or conveyance of the assets of a debtor that is deemed to be made for the purposes of hindering, delaying, or defrauding actual or potential creditors may be determined by courts to be fraudulent conveyance under Section 548 of the U.S. Bankruptcy Code or under a relevant theory of constructive fraud. Wow. This is going to be a good one right here. I'm going to have to copy this one. All right, so Shift Command 4. Grab all that. Boom. Save it. Print it and send it. Okay, so right here, although each U.S. state has its own laws regarding the appropriate elements of proof of constructive fraud, Section 548A2 of the U.S. Bankruptcy Code permits an inference of constructive fraud if the following factors exist. Number one, the debtor received less than reasonably equivalent value for the property transferred. Yeah. Oh, yeah. Yeah, like in a short sale. Mm-hmm. They give you $3,000, get out of here. But if you put $85,000 down, like I did, and you've had months, years of paying into it, just saying. Number two, the debtor was insolvent or became insolvent as a result of the transfer, or else retained unreasonably small capital after the transfer, or made the transfer with the intent or belief that it would incur debts beyond its ability to pay. The following theories of fraudulent conveyance within the context of securitization may apply, where the sponsor originator receives insufficient value for assets transferred, where there is an intent to hinder, delay, or defraud creditors, representing an implicit pre-petition waiver of one's right to file for bankruptcy. With regard to the originator's transfer of assets to the special purpose vehicle, or the originator's transfer of assets to the SPV has clearly not been undertaken on an arm's length basis. Where securitization increases the originator's bankruptcy risk, and in all instances where securitization usurps the United States bankruptcy laws and is therefore illegal on such a basis alone. Securitization violates federal RICO statutes, turning now to the reality that securitization constitutes a violation of the U.S. federal RICO statutes. See legal notes below. We can state without equivocation that the entire securitization process constitutes violations of federal RICO statutes because, number one, there is the requisite criminal or civil enterprise consisting of the sponsor, issuer, the trustees, and the intermediary bank. These three parties work closely together to effect the securitization transaction. All right, let's break that one down just a little bit. There is the requisite criminal or civil enterprise. It consists of the sponsor or the issuer, the trustees, and the intermediary bank. So all those three parties work closely together to effect securitization transaction. All right, let's see what we got here. Oh, there are predicate acts of mail fraud. Mail fraud. Using the mails for sending out materials among themselves and to investors. B, wire fraud. Using wires to engage, not wires as in like up there telephone wires, but they're wiring money to engage in fraud by communicating with investors, or maybe even phone conversation too. C, conversion, where there isn't proper title to collateral. Oh my goodness, right there. Conversion. Oh, did your name get converted? Excuse me. Yes, our names got converted, people. Because you do not spell your name like how they have it on your title. You know that? Is your name spelled in all caps name? No. And does it have a description like married, husband and wife, single person, divorced? Does it say anything like that? Yeah, because just because there's a name there with a description doesn't mean that's you, you know. Conversion right there. Boom. That's what I'm saying. Where there isn't proper title to the collateral. Right. In the case of my timeshare, for sure. They call me an owner. Yeah. No, I'm not an owner. I mean, I paid for it all, but that name is all capitalized because there was a conversion done on my name. D, deceit, misrepresentation of issues and facts pertaining to the securitization transaction. E, securities fraud, disclosure issues. Yeah, are they giving us a disclosure and telling us that they're doing anything like that? No, they're not. They're like, let's do the security agreement here. We're gonna, what was he saying? We want you to feel secure in the numbers, so we just wanted you to see that the numbers that you have on the pieces of paper over there, they match the same as on this iPad, on this computer version. See how it's like, you know, the same numbers over there, 18,000, and here's 18,000 over there. Yeah, 18 plus 18, that's a lot, 36. It looks like you're doubling it to me. It doesn't look like you're restating something. It looks like you're doing two different things. One of them is securitization and the other one is a contract. Or maybe you're constructing some type of a loan. Yeah. F, it entails loss of profit opportunity. You have an opportunity to lose profit. G, it involves the making of false statements and or misleading representations about the value of the collateral. Oh, you know how real estate keeps going up? Yeah, it keeps going up all the time. But yeah, if they wanted to buy it from you, they go, oh, well, we're just only going to give you what you paid for it. Oh, wait, I thought real estate went up. He's going to offer me, if I wanted to sell it back to you, just going to offer me what I paid for it a long time ago? Make up your mind. How much is it really worth? I think it went up. H, it entails stripping the originator, issuer of the ability to pay debt claims or judgment claims in bankruptcy court. Oh, a state of affairs that may apply where the sponsor is financially distressed and the cash proceeds of the transaction are significantly less than the value of the collateral. There is also typically the requisite intent by members of the enterprise, evident in knowledge, actual and inferable, acts, omissions, where they decide not to tell you stuff, purpose, actual and inferable, and results. Intent can be reasonably inferred from A, the existence of a sponsor that seeks to raise capital and cannot raise capital on better terms by other means. B, the participation of an investment bank that has very strong incentives to consummate the transaction on any agreeable but not necessarily reasonable terms. Securitization also violates U.S. antitrust legislation. Securitization further constitutes violations of U.S. antitrust laws because the American asset-backed securities and mortgage-backed securities markets are dominated by relatively few large entities such as Fannie Mae, Freddie Mac, the top 5 investment banks, all of which have conduit programs, and the top 5 credit card issuers, MBNA, American Express, Citigroup, etc. As a consequence, the top 5 ABS, MBS issuers control more than 50% of the United States ABS and MBS market. This constitutes illegal market concentration under U.S. antitrust legislation. The Philippines exception, buried in the Clayton Act. In the antitrust context, however, observe the following text from the Clayton Act, which specifically excludes transactions undertaken with the Philippines. Isn't that interesting? All right. It provides a blanket rationale for the massive past and ongoing U.S. clandestine focus on the Philippines, the CIA's need for black hole conditions, there in connection with successive U.S. operations to relieve Presidents Marcos and Aquino of the stolen and hidden Yamashita's gold, the U.S. fraudulent finance operations using Philippine institutions and related operations based in that territory, an aborted U.S. operation to convert the Philippines into a new U.S. state, as had been planned under Clinton for Somalia, and the frequent visits of operatives known to ourselves in the Philippines under the cover of attending to orphanages. All right. Subsection 1, Clayton Act 15 U.S.C. 12. Short title. A. Antitrust laws as used herein include the act entitled An Act to Protect Trade and Commerce Against Unlawful Restraints and Monopolies, approved July 2nd, 1890. Sections 73 to 77, inclusive of an act entitled An Act to Reduce Taxation. Excuse me. to provide revenue for the government and for other purposes of August 27th, 1894, an act entitled An Act to Amend Sections 73 and 76 of the Act of August 27th, 1894, entitled An Act to Reduce Taxation, to provide revenue for the government and for other purposes, approved February 12th, 1913. And also this act, commerce, as used herein, means trade or commerce among the several states and with foreign nations, or between the District of Columbia or any territory of the United States and any state, territory, or foreign nation, or between any insular possessions or other places that are under the jurisdiction of the United States, or between any such possessions or place in any U.S. state or territory of the United States or of the District of Columbia or any foreign nation, or within the District of Columbia, or any territory or any insular possession or other place under the jurisdiction of the United States, provided that nothing in this act contained shall apply to the Philippines Islands. The word person or persons, wherever it is used in this act, shall be deemed to include corporations and associations existing under or authorized by the laws of either the United States, the laws of any of the territories, the laws of any state, or the laws of any foreign country. Fannie Mae, Freddie Mac engaged in further illegal securitization, re-securitizing already securitized DUD or DUD, excuse me, DUD assets to dump back on the banks. Even so, it became apparent in early March that Fannie Mae and Freddie Mac, both controlled by the United States government, were planning to force financial enterprises such as CIA's Bank of America. What? Corporation? You kidding me? JP Morgan, Chase and Company, Wells Fargo and Citigroup Incorporation to buy back further waves of newly securitized packages of mortgages. Wow. Example, the former government-sponsored enterprises are reportedly engaged again in repackaging mortgage securities already marked down to true value. Oh, man. Pretty wild. In other words, they are trying to dump faulty securitized loans as well as straight loans back on the participating banks under cover of such fantasies as the double-minded statement attributed to Sharon McHale, spokesperson for Freddie Mac, located adjacent to the CIA in McLean, Virginia on the 5th of March, 2010. We are trying to be good stewards of taxpayer dollars. And as part of that, it's important that those dollars do not go to loans that should not have been sold to us in the first place. Throwing the blame for Freddie Mac's own scandalous racketeering behavior back on the banks. Being interpreted, what this woman was saying was this. We are covering ourselves with a mantle of rectitude by posing as protectors of the taxpayers' dollars in order to obfuscate, blur our own ongoing racketeering behavior, even as we prepare further fraudulent finance securitizations in violation of the relevant U.S. legislation. We couldn't care less because we are owned by the government itself, which is up to its neck in such violations. With Paul Miller, a former examiner for the Federal Reserve, hardly a guarantee of integrity, Given the Fed's own reputation for fraudulent finance, based in Arlington, Virginia, let the cat out of the bag with, if you want to originate mortgages and keep that pipeline running, you have to deal with the pushbacks. It doesn't matter how much you hate Fannie and Freddie, and neither apparently does it matter what extent the rule of law is cynically violated in order to keep the pipeline of fraudulent finance running. It doesn't matter that securitization is a form of racketeering. Gary Gensler is not as opposed to fraudulent finance as he seems. The appointment of Gary Gensler as chairman of the Commodity Futures Trading Commission under President Obama was greeted with signs of relief on Wall Street. Here was a hardened former Goldman Sachs trader with 18 years' experience with that cynical, ruthless money shop, who could be relied upon to act at all times in the interest of Wall Street, not the investor and taxpayer. But as has since been reported elsewhere, over a private lunch at the Waldorf Astoria in Midtown Manhattan on 6th of January 2010, the 52-year-old Gary Gensler caused indigestion among the self-satisfied guests at the luncheon. Timothy O'Hara, head of the global credit at Credit Suisse Holdings USA Incorporated, Robert P. Kelly, CEO at Bank of New York Mellon Corporation, David B. Heller, co-head of the Securities Division at Goldman Sachs, and Seth Waugh, CEO of Deutsche Bank Americas. Because when one banker asked Gensler what or whom he saw as the biggest obstacles to reform in the securities and commodities sectors, he replied, "You." Mr. Gensler has been seeking derivatives control legislation that goes beyond current proposals, including what President Obama put forward during the summer of 2009. Notwithstanding the fact that if the derivatives situation is not addressed, the forthcoming crash will be so horrific as to be likely to tip the world into open rather than covert warfare, a certain Dr. Samuel Hayes, professor emeritus of investment banking at Harvard Business School, Boston, told Bloomberg in February 2010 that Gensler is going to raise real concerns for financial firms. Derivatives are absolutely central to what is Wall Street in the 21st century, namely a casino. All right, well, I'm going to stop right there because I have got to finish doing my airline stuff. But I thought that that would be interesting to start reading that. Securitizations are illegal. And I got to get something to drink because now my tongue is dry. Well, you guys have a good one, and we'll see you in a few days.